Hey folks, Dan Frio here, the Mortgage Update. Today is May 27th, 2020. So what we're going to talk about today is what happened in the market. I'll give you a preemptive of that. It was basically flat, but we have some phenomenal news on the purchase market. So people are buying houses and the numbers are kind of amazing. I'll put it that way. And then we're going to go over a mortgage hack is what I'll call it. And it's how you could pay off your house, let's say 8 years early. And I'm going to show you the numbers. So don't go away. We'll be right back. Okay, let's get to it. This is my website, and it will be changing probably within the next week. We keep upgrading, and hopefully I'll get the background behind me upgraded here shortly as well. It's all this is a work in progress, and I greatly appreciate you guys' support because you're helping me keep growing and expanding. So thank you so much, and I hope you like the content that we have here. And at the end, we're going to go through this on how you can get a hold of me if you like what you see, and we'll be able to take care of you. So what happened today in the markets? Well, we're down 6. That's kind of a little deception of what happened today. We had a nice little rally in the day, and I'll go through some of those numbers with you right here shortly. But I just want to give to the newbies out there what we do and why people come to my channel. Few things is they need mortgage help. And I kind of show you, I've been doing this for 32 years. I take pride in what I do. I'm not in this to make a quick buck, deceive you, cheat you out of anything, and lie and, kind of throw a curveball to you. I'll give you the truth right out of the gate. And if you look at, we call ourselves now, or I call myself now, the rate update, and that's what we're branding everything. So the T, rate, R, update, U, true. So we try to give you true information on this channel. So that being said, what we follow here is I try to educate you guys on what's happening in the mortgage markets with guidelines, some credit advice, mortgage advice, and all kind of information that we can pass on to you. But I post every day to tell you what's going on with mortgage rates. We follow this number right here. Why? It's the mortgage-backed securities market. What does this do? Well, it's the bond that trades that determines mortgage rates. So this is a bond. So let's just go back to bonds 101 to explain to you how bonds work. The higher I pay for a bond, so if it's a $100 bond and I pay $100 for that bond, that means I bought it for $100, and when it matures, I get $100 back. My rate of return is 0. I got no interest, no yield, no nothing. But if I pay $50 for that bond over maturity, I'm going to get 100% return. So I get a higher rate of return, a higher yield. So we like when this number is going up. It means the price of the bond's going up, because thus we will get a lower yield at the end of the day, meaning you're going to get a lower rate at the end of the day. Okay, so that's why we like this number going up. Today it went down 6. Not a bad number. We like flat. And if you follow this right here, I love this, and all the lenders are loving this. And as a consumer, you should love this. The markets are flat right now, and this is gaining or allowing us to put not hedge our bets as much, meaning that we could pass on lower rates to you. Because when the market's really volatile, what we have to do is we have to hedge our bets, saying we don't know what tomorrow's going to bring. Are rates going to skyrocket up? Are they going to plummet? So we have to put a profit margin in there, because we have cost of funds and all this other stuff that we have to kind of increase our rates or profit margin a little bit. Thus, we have to increase the rates, because to hedge against that volatility. When the markets are basically stagnant, we don't have to increase the rates to hedge our bets, because there's really not much going on. So that being said, a 6% or a 0.6 or a 6 we call basis points drop in bond prices today really has no effect on what happened today in rates. So the rates today were very, very stable, and that's what we watch. Also, what I normally try to do is go over with you is the economic calendar and what some of the things are going to come out this week that should or normally make an impact on mortgage rates. In the past, well, since the pandemic, none of this has really dictated anything. what actually is determining this price of this bond here is basically the Federal Reserve. And you see right here, the Fed came in today and bought $4.7 billion in mortgage-backed securities. What they've done in the past 3 months is they come in and basically they did a fantastic job. And you see it right here. They're stabilizing the markets. And that's what we as lenders needed. And you might say, I don't really care about lenders. I just want the best rate in town. But because of the volatility, again, what we did is we had to hedge our bets in a way that we had to increase our rates to offset the hedge costs that we pay. I won't get into that detail because I don't want to confuse you. But the government's been doing a fantastic job on that, believe it or not. But what normally affects mortgage rates is all this data that comes in. And there's consumer confidence. The more confident people are, the better the economy is going and the better the stock market's going. Thus, normally in a bad way, it's bringing up more people are buying stocks and they're pulling out of bonds. They want more riskier investments, and that brings bond prices down and yields up and so forth. So consumer confidence plays a role in it. Home pricing indexes play a role in it. Manufacturing indexes, Beige Book, GDP, employment, and all this other stuff. So I'm going to get back to this because we're getting a little bit back to normal. So today I wanted just to focus on the Fed came in and stabilized the markets. There is some economic news coming out today or this week. But one of the surprising things that came out today was home sales. Purchase applications, believe it or not, purchase applications are 9% higher than where we were last year at this time. And to that figure came out today, and it amazed me because I'm thinking, the world's getting the world's getting crushed, but our economy is getting crushed. And to see home prices that solid, I will say home sales that solid, that solidifies the values of the homes as well. So that to me was amazing. There's more and more people filing forbearance, and again, I'll harp on that for 1 second. Forbearance isn't the greatest thing that everybody in the news makes it sound to be. It's basically you're kicking the can down the street, and those payments are going to come due sooner or later. They might come due at a time that you least expect it. So be careful when you're doing that. That leads me into the next thing, my credit hack. My mortgage hack of the day. All right. Somebody asked this, and I see this a lot. They're saying, and I see these videos, and how to pay off your mortgage in 5 years. Well, half those videos are just a bunch of BS. And here, I'll say it this way: if you owe $400,000, $500,000 on your home, and you make $100,000, you don't make enough money to pay off your house in 5 years. So take it with a grain of salt. They're trying to get you to click on their whatever they're trying to sell or explain to you. I'll give you the facts behind everything. Okay. So what I decided today to do is just show you how you can maybe help during this time right now. I know forbearances are running rampant because people are rushing to that program because they're like, it enables me to, I'll say, postpone or delay maybe 2 or 3 of my mortgage payments. Wonder if I can help you, remove or skip 1 mortgage payment, maybe 2. And also pay off your house, let's say 8 years early, on almost making the exact same payment you're paying now. Okay. So how do we do that? So I did this analysis, and this is a program that I have. Here, hold on. Let me get to it in a second. And here it is. And let's go through the calculations. What I did is I went into this is a calculator that I have. So if you want me to run this for you, I'd love to do so. So what we do is we put in your home that you purchased, and we compare it against what we can offer you today. So watch this analysis that I put in. You have an existing loan. Let's go back to this and let's see if I can pull this up. Okay. I'm doing a house in California. It's in Los Angeles County. It's my California home. I bought it for $480,000. My taxes are $6,000, and it's an effective rate that this calculator actually puts together for me. And I put in all my information. Okay. So it comes down here, and I put in that my loan was on a term of, Let's go down through here and compare some things. I went through that data with you. Let's go to next. And basically we find the loan amount we did was $456,000 on a 30-year term. It was a conventional loan at a rate of 4.875. The mortgage insurance calculator actually calculates it for us, saying our estimated payoff today would be $443,735. And we bought this property back in June of 2018, so 2 years ago. All right. So that's the data that we have. So then I go in and I say, okay, wonder if I redo this into a new loan, and it drove that balance over from 443,735 into this. And I want to do a 240-month term at a 3.25% rate. That's basically what that rate is going for with today. No points. The mortgage insurance would be, I'm going to say, help me, and I'm at a 83.09% loan to value, so I'm going to confirm that. That's going to plug in my PMI. And my closing costs I'm going to put in are $2,500. Title insurance out in California is pretty steep. So we're going to add that loan to the equation. All right, and I'm going to get rid of this right here. Okay. And let's calculate. So now it tells me a bunch of information about, how much this would save me each month, if any, how much it saves me over the life of the loan. So we're going to look at just a couple points. We're going to say, what does this do to my monthly payment? What is my break-even point? Which I don't even know if that matters, but to some people, especially out in California, you guys, the appreciation out there is so good in many areas right now that people are buying and they're staying 5, 6, 7 years, 8 years and moving off, building up bigger and better and all that. But it'll give us our break-even point and then how much we would save over the term of the loan. So this basically will break it down. And here's it kind of in a nutshell. Our break-even point would be, it would take about a year to break even because of the $2,500 in costs. So that's telling me my monthly savings isn't much, but I would save almost $170,000 in interest. So let's get to it. Let me go down through and kind of explain some things to you. So your monthly, let's see right here. I'm going to expand this right here, and it's going to break it down. So my total monthly expenses are going to be $3,264 on the existing loan and $3,216 on my new loan. So let's just go back to the principal and interest part. Right now, principal and interest on the existing loan is $2,413, and on the new loan it's $2,531. So it's $118 more a month. Okay, so not bad for $100 a month extra. We're going to send in that payment. I want to go down to here and look at how much we've saved over the life of the loan. So over the life of the loan, we're going to pay off or save $170,000 by keeping almost your payment the same. It's just virtually right around $100 extra a month that you would be sending in. That's what I'm trying to say right now. There are a lot of people out there at 4.5 to 4.875% interest rates. You're able to do two things right now. You're able to reduce that rate in most cases. The rates are at historic lows. And if you bought 2-3 years ago, you probably have a rate in the mid to upper 4s. And at that time, those were phenomenal rates. But today, based on a 740 credit score and a good loan to value and everything, we should be able to get you right around 3.25, maybe even less. If you're under an 80% loan to value, we might be able to get you 2.875 on a 20-year. And that's very likely. So these savings are even going to be expedited from there. So let me do something real quick. Let's add another loan into this. And I'm going to put in a 15-year loan. And that's my balance. It's going to be 180-month terms. 180-month term. Our rate will be 2.875. Points, nothing. Monthly mortgage insurance. Help me. Put that back in. Confirm. Closing costs, I'll put in $2,500 again. And we are going to add the loan over in this scenario, and we're going to calculate. So now let's see what this does to our payments. And this might put you in a spot where it just doesn't make much sense in your situation. But let's at least look at the numbers. Your monthly principal and interest rate now is $2,413. It would go to $3,055. So it's going to go up about $600. Let's go down to the bottom though and just see the break-even point. I have to move this now to a 15-year term over here on the top left. Let's see what this does for us in the amount of savings that you would have. So on the 15-year term, you're going to save $168,629. So $170,000 in interest. So you might say, well, the 20-year saved us much more. Well, after this is basically the point where you would be after 15 years. So after 15 years, this loan's paid off and you've saved $168,000. This loan you're still paying on. But if this was me, what I would do, I would go with the 20-year term, get a lower rate. You're going to skip probably 2 mortgage payments. And during these times, that does come in handy, very handy. Right here, this is crazy. It's $100, $120 a month, $17 a month, $118 a month. I'll take that back. $118 a month extra that you send in. And you're going to pay off your house that much early and save $169,000. Now look over here. This was that term for the 15-year term. Why that savings is so much now, your house has been paid off for 5 years. So now it blows up and says, now you've saved $227,000, $250,000 in savings or interest not paid. So that's my hack, or the best way I can put it. How to refinance, take advantage of these rates, skip 1, maybe 2 mortgage payments, and pick the term that fits you. But even in this case, we bought the house in 2018. We're in it for 2 years. We have 28 years remaining. This will pay off your house 8 years early for an extra $100 a month. That's nuts. And you should look into doing something. So that's my credit hack of today. This is math that does add up and shows you how you can truly pay off your house quicker than you anticipated. And you can also live. So if you like what you see, please reach out to me. I'd love to help you. And we're basically all over the country at this point. If you want to reach me personally, just give me a call at 844-775-5626. And that 5626 is actually spelled out as loan if you want to dial 844-775-LOAN. But if you want to reach me via email, you can get me at D for Dan Frio, which is Frio, at preferredrate.com. So dfrio at preferredrate.com. Or visit us on the web at therateupdate.com. And we'd love to help. So if you would, please don't forget to subscribe down below. Leave your comments. Share the video. Let's help get the word out to as many people as we can. We just hit 8,700 subscribers. Help me get to 10,000 by the end of June, and I'd greatly appreciate it. So please reach out to us if we could be of any help. God bless, and God willing, we will see you tomorrow. Same time, same place. See you then. Bye-bye.